Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 1st of April. Now this week is not only the start of a new week, it's the start of a new month, and it's also the start of a new quarter, and that's going to be important to know where those money flows are going within the stock indices. It's also non-farm payroll week, and we're expected to see those numbers come out towards the end of the week, and it's also the week after the UK was expected to leave the European Union. So we all know that didn't happen last week, and I think more importantly, there seems to be sort of little conclusion on the direction of where that is all going. So with this week of potentially sort of big news, let's go and take a look at some of the markets here that we're focusing on in the trading room. So if we come and take a look at the stock markets, first of all, this is the Dow Jones futures contract, and we've been looking here for this market generally to be bullish. Now, a couple of weeks ago, there was a lot of talk that the markets were sort of pricing in recessions. This is due to the sort of historical low bond yields at the moment. But stocks at this moment in time are sort of proving that the technical trend here is prevailing. So we can see that the market did pull back into just a key support level when this bad news sort of started to hit the wires, but the market really failed to close under the key 25,500 level. And today, now we're seeing that the market's rejecting off that level sort of quite nicely, and we could start to look for possibly a move up here towards the 27,000 in that sort of near term. If we come down to the daily time frame, we can see the 25,500 level here being rejected multiple times. We can also see that now the market's sort of pushing up through the next level of resistance that we had, which was 25,850, and now almost getting up here towards this 26,000 sort of 200. Now these are levels that we've had many trading opportunities around over the past sort of few weeks here in the trading room, and market's been reacting very technically around them. So the big key one for us now is 26,000 sort of 200. If this level then gets taken out, if we can get above this level, then, well, there's not a lot in the way for the market sort of moving higher, possibly pushing up towards 27,000, which is the historical highs. So that's sort of quite a decent sort of move to the long side. Again, with the money flows that we're seeing obviously coming into the market here at the beginning of the month, as we can see from this sort of bullish candle here on the 4-hour chart, we can assume that there is fresh money coming into stock markets, and that may well sort of be enough to help the markets here retain that sort of bullish momentum. So for us here in the trading room, as long as these trends are staying intact, as long as we're seeing this sort of bullish momentum, our bias is to the long side, and we're continuing to look for long opportunities here on the stock markets. Now, if we come and take a look at gold, gold here has had a sort of reversal effect here. Now, with the money flowing into stocks, it's got to come from somewhere. And, this is really what we're seeing at the moment is a flip from risk adverse, from safe haven instruments into those more risky instruments such as stocks. So we're seeing that sort of switch of money here. And what's happened here is that the gold has now sort of fallen back into its comfort zone here, right in between two technical levels. So if we're looking at this on the daily chart, you can see that we've got the key 1.3 level here and also the 1.290 level, which have been very significant here on this market, actually going back long before the time frames that we can see on this chart. So as long as the gold is sitting within this range here, it's really kind of in no man's land. There's no sort of decision point here. And really what I'd like to see is for the market to break out of these levels, break out of this zone, to start to look for trading opportunities. Either way, whichever way the gold goes, as we can see here, there is a decent trading window either side, either to the long side, back up towards that 1320 level, or to the short side back down towards 1275. Now, certainly at the moment, if we look at the general sort of economics with money flowing into stocks, that may well put more pressure here on the likes of gold. And if that 1290 level gets taken out, we could see an easy move down here towards that 1275. Now, as far as currency markets are concerned, one of the markets here that is of most interest to us at the moment here is euro dollar. So with the continuing strength that we're seeing in the US dollar market of late, that's having a supporting impact here on the euro to the short side, and there hasn't really been enough good news coming out of the euro to be able to support and bolster this. So that's why we've been seeing this quite a well-established sort of short trend and weakening here of euro dollar over sort of recent months now. So taking a look at this on the monthly chart, and the reason I wanted to come up to this really high time frame was to highlight the level that the euro dollar is very, very close to. That's this key 1.1200 level here. You can see that the market's tested this multiple times. It's been a very significant sort of price point for this market. And we've had a lot of pressure now starting to build up on this to the short side. If we come down the time frames here to the weekly chart, you can see that this 1.1200 level here tested sort of multiple times. You can see the sort of pressure sort of building up, and more importantly, underneath that level is quite a decent size trading window to the short side. You can see there's not a lot of potential sort of support in the way for, well over 1,000 points here. So many quite a decent size window to the short side. And you see every time that the market has taken out this 1.1200, I should say, it's sort of fallen down to the next sort of level or risen up to the next level sort of fairly easily. There's not an awful lot in the way, of course, here on these macro pictures. So from our perspective, what we're looking for, this level is very, very important. We're looking for the market for trading opportunities as that market breaks out of that level. At the moment here on the sort of intraday time frames, we're seeing a bit of a bounce off that level, which is quite well, quite sort of expected really, as it's such a sort of key level. But the point here really is where could this go? And if the market really starts to get past this sort of 1.2 sort of 700 area, then that is really the sort of area where the market needs to get through before we can start to see any sort of change towards this sort of bearish momentum. Even if we start to sort of mark in some analysis here on this sort of recent trend, we can see that this sort of level, this 1.1270 level, is quite a key point here in the market. So, if clusters with fib 50% of the recent fib move of this trend on the 4-hour time frame. It's also a significant level that we can also see has been previous support and resistance. And this is the sort of area that would be still bearish the market as long as the market is underneath this sort of level. So we might get a bit of a pop here, as the market's testing these strong levels. But from a macro perspective, we're still looking for the market to be breaking those lows. And if it does break those lows, it opens up some nice trading windows to the short side there on euro dollar. So there's a few markets there that we're keeping a close eye on for trading opportunities at the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.